So let's first talk about this news article. We're actually going to cover two news articles at the same time. Number one, this is from CNBC. Home buyers are the most pessimistic they've been in a decade, thanks to tight supply and high prices.
Oh, that sucks.
It's tough to be a home buyer today. Supply of homes for sale is at a record low. Home builders are slow to step up, and prices are rising the fastest pace in nearly 2 decades. Let's talk about why home builders are slow. I don't think they're just slow because it's fun to be slow. I mean, it's a supply constraint too on the materials as well. So no wonder sentiment among home buyers fell to the lowest level in 10-year history of Fannie Mae's monthly home purchase sentiment index. So the data here that I'm about to talk about, these percentages come from Fannie Mae's monthly home purchase sentiment index. And if you go to CNBC, you can see the full sentiment index. There's a link to it in the article. So the percentage of respondents who said it's a good time to buy a home decreased from 53% to 47%, while the percentage who said it's a bad time increased from 40% to 48%. So now the number officially has flipped. 48% of people think it's a bad time. 47% of people think it's a good time. So here's a quote from Doug Duncan. He's a senior vice president and chief economist at Fannie Mae. He said the decrease in home buying sentiment likely indicates that some consumers, potentially flush with savings, perhaps boosted in part by stimulus payments, may be attempting but failing to buy a home due to the heightened competition for relatively few listed homes. And what I want to hear from, especially if you're in the Clubhouse, if you're joining us, are you still seeing a supply constraint in your area? Are you still seeing a shortage of inventory? Also, are you seeing more and more properties come on the market? They say consumers specifically with incomes between 50,000 and 100,000 were particularly pessimistic. And
that makes a lot of sense, by the way.
Yeah, that does make a lot of sense. In another record, 48% of homes sold for more than their list price. It's up 20 percentage points from the same period a year earlier. Home prices more than 11% up from a year ago. Now we're starting to enter this week and next week. We will start to enter that time period in which the market started to recover. The showings on homes began to increase last year about this time, and then more properties were going under contract last year about this time. So as we talk about the closings, we still have about another, I would say 3 weeks or so before some of those closings that started happening last year that were the record number of closings, record number of prices, before that really takes effect. And then we could kind of compare what was going on. So we'll kind of see how that looks. So that is Article 1. That's on CNBC. Article 2.
But wait, there's more.
But wait, there's more. That's my infomercial. Oh, we have a video coming out, by the way. Anna Bridges did an incredible job. We filmed this last year, but then she went on vacation. We have some stuff. So now we're finally about to release this. And it is an infomercial for real estate. It's going to be a lot of fun. So follow me on the interwebs and you'll see that. All right. So here it is. Most Americans now believe it's a good time to buy a home, despite soaring house prices. And here's why. So this is a Gallup survey. They say 53% of Americans believe it's a good time to buy. And if you go to let's see, this is on realtor.com. It's from Market Watch. Jacob Passy, he's the guy that wrote it. You can go to their report and there's a link to the actual Gallup article. So feel free to use that.
By the way, if you scroll through, Ray, you'll see how many actual Americans they polled. Did you see that?
Yes, I saw that earlier.
It's 1,000.
Okay, 1,000 Americans, based on 1,000 Americans, 53% of them, 530.
Right, which is what percentage of the actual Americans? I mean, there's 320 million of us.
No. This is accurate. 53% of Americans now believe it's a good time to buy a home, according to Gallup. So the number's not that. And like, if you look at these two polls, right, totally different people, totally different polling. It's basically as good as a political poll, right? 53% people say now's a good time to buy a home. Fannie Mae says 47%. You know, the difference is 6%. Is that plus or minus?
It's a wash, pretty much, isn't it?
Yeah, I would say about half. That's how you shorten this. About half of Americans think it's a good time. About half of Americans think it's a bad time.
Because you could take that 53%, and if it was 57%, then you could spin it and go, however they spun it on the first one, home buyer sentiment in the red, with this poll or whatever. It could have been something too, instead of the spin that 53% is better than 47.
Right. Gallup found that 71% of Americans believe that home prices are going to increase over the next year in the local market. And there is a great item to point out to those of you who are real estate agents and you're looking in your market. You're wondering, where's the silver lining here? How are buyers going to buy now with all the inventory and all the trouble they have to go through? 71% of Americans believe that home prices will increase over the next year in their local market. So they don't see that there's a end in sight. And we've talked about this before, so I'll just kind of briefly mention it again. Over history, there's only been 2 recessions in which house prices have gone down. All other recessions that have been recorded, home prices have gone up 2 to 6%. So even if you thought home prices were, even if you thought there was going to be something major in the future that was going to happen and home prices were going to completely tank, it doesn't look like it. It doesn't look like, even if the economy tanks, I mean, it doesn't look like home prices will be far behind it. So it looks like home prices are going to continue to increase. You'll see the headlines that say home price gain slow. And that's what I think most Americans believe as well.
Well, and you know, obviously the crash from 12 years ago or 13 years ago, whatever that was 19%, right, Ray?
Yeah. So in 2008, 9, when that recession took place, home prices decreased 19.1%, I believe it was.
Yeah.
In previous recessions, the other decrease was only 1.9%. So
right.
A huge difference there. and,
Yeah.
and because, which we'll get to later, because of the lending constraints being so tight for most Americans right now, it appears that the overall financial health of everyone who's buying and selling properties is way better off than it was in 2008. But we need to talk about this because later we're going to cover an article that may be concerning for those of us in that camp.
Well, and on this point, I kind of want to say, we've mentioned on the show, and then I kind of am having this conversation with my buyers, my current buyers, is buyer fatigue is going to be a real thing. And I think this is the stats showing that that's a real thing. You know, people are just going to go look. I mean, especially in that kind of, the article mentions the $50,000 to $100,000 income per year bracket, where they're just like, I can't get anything. I'm going to wait. And even if they see home prices going up, maybe that means more sellers will come on the market. Maybe that means less buyers will be in the market. I'll try again in a few months. I think buyer fatigue is or will be a real thing. And I think this is part of it. You know, it's going to be a lot more. So I kind of, although I don't like the headline, you know, the negative headline, I side more with that. Like, you know, it's just a tough time. Because, I mean, I've been working with one set of buyers for 5 months now, and we've written 12 offers. I just literally before the show submitted our 12th offer. And it's in a very competitive market. And, but they're still positive, like, okay, cool. We're a bridesmaid again. We're eventually we'll be the bride, you know, like.
So I invited.
Go ahead.
I was just gonna say I invited Lisa Wood to speak because she's also in Clubhouse, but she left a really good comment. So Lisa, if you're listening, hit that because I want to see if I can bring you up to talk about it in Clubhouse. But D Jones says she's at an open house every weekend and there's homes, but 20-minute lines. She said she sees homes go under contract, then financing falls through, then back active, and they increase the price by 15 to 20,000 in their market.
Well, that's the offer they got. I mean, they got that offer. They went into escrow at that. Now that seller wants that, you know, which honestly, if depending on why it fell out, I would advise the seller, leave it at the price we had it. We got a lot of offers. We got a lot of traction. Leave it at the same price. And then, you know, I don't know. I've seen that too, where you see that increase, that green arrow up. At least we have that in our MLS. Where is D again? What D, if you want to comment, which market are you in?
She said they're paying recording fees, transfer tax, offering cleaning services to move out. Wow.
Yeah. My buyers are covering, we'll do no appraisal contingency. We're covering the home warranty, you know, which is typically a seller paid thing.
Okay, I'll put her comment up here, even though I asked her to come up and speak. I'd rather have you say this out loud, Lisa.
Yeah.
But that's okay. She said, we're trying to buy an investment property in Charlotte for our daughter and 2 friends to live in. We lost out on 2 offers due to our budget. We've learned how hard it is when people come in 10 to 20% over budget, no inspection, no contingencies, large due diligence. Plus, Redfin reported that buyers are also offering gifts like trips to the Caribbean.
Where's that story?
Wow. Really? We need to find this. Oh, okay, Lisa, I want to know more about this. Wait, let me put up the Clubhouse group. All right, Clubhouse crew in the house. Lisa, tell me more about this. What are you talking about? Gifts like trips?
Yeah, so we are, and if you echo in the background, it's because I got your Facebook going on back there. So we are trying to buy an investment property over in Charlotte. And our goal is that the two roommates who just graduated college will be able to pay the mortgage since we're putting the money up front for our daughter. So what we are finding is that on average 10 to 20% over asking price. And we've gone in on two homes $10,000 over. We increased our due diligence and we don't have any contingencies. So according to the realtors, we look like we have a strong offer. My husband found an article on Redfin the other day that is proven to be true, that 10 to 20% over. People are waiving contingencies, waiving inspections, and then they're coming in with love letters, which we were told are illegal, but still giving love letters, sending photos of their families. One buyer came in, paid all cash, $50,000 over the asking price, found out that the homeowners liked the ocean and threw in a vacation trip to his villa in the Caribbean, and they accepted.
That's
so as a buyer who we have a budget, not to mention as an interior designer, I'm not opposed to finding a fixer-upper, but I am blown away at the quality of homes that are coming on the market, and they're coming in selling as is. They won't give you photos. You can't get in to see it. It's like you buy it, take on our problems, and have at it. And they're selling, a 1,200 square foot home or 1,400 square foot home for $250,000. And I know what it costs to upgrade stuff. And as an investor, you want to look at those 5 important key elements, right? Foundation, electrical, plumbing, roof, etc., HVAC. And I'm just blown away at the quality. And then the lack of response by the realtors. So the listing agents won't answer our realtors' information. They ignore the requests. And it's just, I don't know if they're new and they don't have an understanding of what it's like to be a professional. And we had one offer that the homeowners put their house on the market. We made an offer and they were too busy to look at the listing or at the offers because they were on a conference. And it's like, well, why would you put your house on the market if you're not going to even answer the response? So our money was tied up for a week and a half and we couldn't make any other offers. And these homes are out in Charlotte are selling in 2-3 days, sight unseen. So it's crazy. I don't understand. I haven't bought a house in 16 years. So this is a little nutty for me.
Hey, can I blow her mind real quick?
Yeah, go ahead, Dan. What was that?
So I just want to blow your mind real quick. So the offer that I just submitted, we offered $250,000 over asking.
Wow.
Holy moly.
Yeah, it's listed at 950. We offered 1.2.
But did you include the trip to the Caribbean? Because you still may not get it, Dan.
I know. I didn't think to do that, to send them to my private island.
Tim McGraw and Faith Hill have their private island, 35-something million. You can just
35 million. I saw that. Yeah.
Well, that's amazing,
Well,
Lisa.
I made a joke and put it on my Instagram page about that we couldn't compete with the Caribbean, but we do. And my siblings and I own a raw piece of land on the east side of El Paso, Texas, and that you could bring your camper and tent. We don't have any accommodations. You can view the mountains. You could go across to Mexico and potentially get to White Sands and the Carlsbad Caverns.
Wait, isn't there a wall there?
I don't know if that would offer any incentive for a buyer, but we do have it.
That's amazing. So, pardon my dad joke, but you'd definitely be putting in an intense offer. Intense. It's terrible joke. Oh my gosh. Well, thank you so much, Lisa, for the additional information.
And on that note, we're going to end the show.
Can you have your husband also send me that article that he found? If he can re-find it, maybe in his search history or something like that, shoot me that article. Because whenever I type in seller gifts or seller gifts Redfin, all I'm seeing is about great gift ideas for real estate agents, which that's also a wonderful search that more consumers should do, maybe. But no, that's what I'm seeing there. So yeah,
the best gift is your referrals.
Oh my gosh.
I will send it to you. And Ray, if you want to go camp on our site in El Paso, I'll be more than happy to give you the address.
I might do it. It's not, I wouldn't put it past me. That's for sure. All right. So let me get to some of these other comments here. Dusty Martin says, my market has a lot of part-timers and newbies in my market. So yeah, that's a factor, but also the homes that aren't even able to be financed in most cases are selling for 5% over list. Wow.
So cash.
Hasna says, the bearded men. Hey, how are you? D Jones says, even though homes are already as is, I'm also seeing a trend of, quote, this home being sold strictly as is in the remarks. With
now,
issue in the future.
I always find that interesting because, it may differ. Remember, we're a worldwide show. We are world famous.
That's right. That's right. Number 16 real estate, or number 16 news show in Taiwan. Just so you know.
Just that. So you guys are currently listening to and watching the number 16 news, not real estate news podcast in Taiwan.
You could say we're in the top 20 of newscasts somewhere in the world.
Yeah. I mean, that's a legit headline, right? Anyway. But I want to make the point that I'm in Southern California, just outside of LA, Los Angeles, not Lower Arkansas. Every single house is sold as is, whether it's stated or not. That's the seller's right. Hey, this house is as is. We'll guarantee no repairs. We won't, offer any credits. It's been that way since I've been doing this for 10 years. And you'll still this. And I see those statements. It's sold strictly as is, almost saying like, because when I'm on the buy side, we still have our rights to do our inspections. We can do any inspection we want. We can have mold out there. We can have obviously the general physical, anything we want, and we can still ask for stuff, and you can still maybe say no. But I've also seen, as I scroll through listings, I see $5,000 credit for repairs, termite done. I still am seeing those things. It's just they're putting it out there, and and I get it. I understand it, where the seller won't do any repairs, but if something major pops up that any buyer's going to see, you're going to do that repair, because if you have a legit home that has it's not a fixer upper. It doesn't need an investor. It needs a new buyer, but it needs 10 grand in roof repairs. You're going to go ahead and handle those roof repairs. Any buyer's going to see that. You know what I'm saying? Does that make sense?
Well, in our market, there's two options people can, I'm going to say click on, because it's, contract is now digital. There's two options to click on there. One is as is, and one is inspection, where they get to inspect within 10 business days, et cetera.
Yeah, we can remove ours. So wait, you can say we're just looking at this house as is?
Well, if you click as is, you don't even have the right to inspect.
Oh, wow. Okay.
So you're actually, whenever you waive the right to inspect in Arkansas, there is no way out for you based on condition inspection. Right. Yeah.
And we can waive our inspection. We totally can, but and my investors will do that. It's just waived up front, and they only need 3 days to get in, view the property, make sure we're good, and then we close in another 12 or whatever. But but every normal buyer they do their inspection.
Yeah, Dusty Martin says Arizona recently, which is the same type of contracts as California. We can still ask, but more and more sellers are laughing hysterically while they howl, no.
Yeah, if it's minor stuff. So what I have seen a trend in is buyers just all of a sudden that, the flooring that's peeling up or the paint that's a little chipped, all of a sudden that's not as important. So I am seeing a lot of that too. But if something major is going on, you're still going to want to address that, because that's going to be an issue. And I'm also seeing, I saw one the other day, it said in the agent notes, seller will not provide a home warranty. Do you know the kind of legal issues you can get into if you do not provide a home warranty? Now, the buyer can pay for it, but it's highly recommended by your broker that you get one of those. And I don't know what it is in other states, but I think listing agents are getting a little too cocky right now. They need to be real careful, would be my advice.
So I'd love to know how this kind of affects appraisals. If you see an appraisal where one is asking for that and one is not asking for that, is that valued differently? How's that looked at? I tried to invite Scap up, but I think he's busy. But
well, you mentioned that last week, Ray. What appraisers are looking at what was offered and what they will pay for it and what it was originally asked for. So if there's a $50,000 difference, they're taking that into account. So I'm wondering if, hey, we're not asking for any repairs, the house is fine, we don't care about the hole in the wall. Like, are they taking that into account? And also, is it a in-person inspection, or are they just doing a curbside?
Yeah, that's interesting. All right. Well, you would think with all this discussion about home buyers being so pessimistic and all that kind of stuff that the number of mortgage applications would actually be dropping, right, Dan?
Yeah, people aren't buying anymore. You know, it's all
Yeah.
pessimistic. It's pessimistic. That's a tough word to
Oh,
say, but
wait, hang on.
Yep.
Scap is up. So Scap is a guy I met on Clubhouse who is an appraiser and he knows his stuff. So I want to ask him, whenever you see a contract that says I'm buying as is, we're not even looking at the inspection, we're paying over list, how does an appraiser view that contract versus a contract with the traditional inspection contingencies in there, Scap?
There's really no, I mean, when I'm looking at the contract, I mean, trying to look at everything there, but I mean, the inspection doesn't really affect me. I'm looking, you know, if they're buying it as is, I mean, I'm going to appraise it for market value no matter what it says in the contract, you know, so it could say as is, we're going to waive this inspection and so on and so forth. But I'm still doing my job to compare apples to apples and still appraising that property for what I believe it to be, in my professional opinion, using the correct comps in the market. So, you know, that's all the stuff that has to go on between the buyers and sellers and everything. For an appraiser standpoint, that doesn't really affect me regardless, you know, whether it's they're waiving an inspection or anything like that, because I really don't pay unless an inspection report's sent to me, and there's lots of issues with the home and everything. Well, yeah, I'll look at that, maybe consider some of that in my analysis. But typically I don't get any kind of inspection reports or anything like that. I'm just doing my observation, and then whatever happens after the fact, if there's things found within an inspection, you know, it's between your buyers and your sellers to kind of negotiate, you know, things and money and moving things. So from an appraiser standpoint, doesn't really affect me. Now, when I see things in the contract that, you know, are kind of wonky, like, you know, that appraisal gap coverage and all this other stuff, you know, that kind of sets me off a little bit, where I'm like, oh, okay. I mean, that's what you're agreeing to, but I'm just trying to make sure when I get a contract, just to make sure that I'm covering everything on there, making sure it's a fully executed contract. Any concessions or any kind of gifts or anything like that I would need to put into my report to consider value-wise.
So whatever you're looking at, it's not the I'm buying this as is, no inspections or anything. It's when they say I'm going to offer you $100,000 over list price, and I'll cover up to $20,000 if it doesn't appraise. What does that do to your brain as an appraiser? I can't imagine.
In my mind, it just makes me just go sit back and go, what the hell is going on here? What are you thinking about?
What are you doing?
Agreeing to these kinds of terms? I know people have their own motivations, their own reasons for buying a house, and their own reasons for spending their own money. But when I'm doing an appraisal for a lender, again, I'm doing it for the lender, for them to assess their risk. I'm not trying to appraise it for purchase price. So when I see something like that in my contract, yeah, I shake my head, I scratch my head, but I'm still doing my job to appraise that property for what it's worth in the marketplace. And then again, that's up to the buyers and sellers to figure that stuff out afterwards. You know, if they want to, how much more money they want to spend or what they're going to do. But when I see things like that in the contracts, I just shake my head. I have no idea. I personally would never agree to something like that. But again, that's my own motivations, emotions, and stuff talking.
That's good. Well, thanks for coming up and adding some insight on that. And from the real estate agent's perspective, whenever we're looking at this and we see somebody offering over appraised value, appraisals they're good data, but the sale prices of the properties that you have to go by in order to obtain an appraisal that proves that value is in arrears. And so what you're seeing is that the market value, quote unquote, that daily market value is moving faster than homes are able to close to prove that day's market value. So there's a seller or a buyer that says, you know, I'm willing to pay that because that's the value to me. Well, that's all a buyer is ever willing to pay, is what the value is to them. So even in a situation in which there's a list price, in like 3 years ago, someone posted in one of those real estate groups recently, are you an irresponsible agent for letting your clients pay over list price for these homes?
No.
And I'm thinking to myself, like, well, you know, 3 years ago, were you an irresponsible agent for letting your seller accept a price that's lower than list price? Like, that's ridiculous. Your clients want to buy a house and they want to pay what they want to pay, and that's all they're going to pay. So in that situation where they know it will not appraise it will not become a lendable value on behalf of the bank for what I am willing to pay for it, because the market has not caught up to that. There haven't been enough closings in that price range yet, and the market's moving faster than the closings are happening. So I'm willing to put additional money to this to make sure that the seller knows that I'm willing to, quote, close the appraisal gap, which also hopefully, SCAP, will help us to get some more data as properties are closing, and hopefully, and as buyers are starting to calm down a little bit, maybe we're going to see the increase in prices from all these closings that have happened, where people are offering above asking. They're going, 110%, 105%, in some cases 120% above the list price. Eventually, those homes are going to close, and then that will be the new data that SCAP is pulling from to prove value. So I think it's just going to take a little bit for the market to keep up, or to catch up with what's currently happening. And then I think the data for all of us will be a little bit better. What is that right, Scap? Do you agree with that assessment?
Yeah, I agree with it. I mean, you just got to remember, a lot of people have this misconception that, appraisers are just using past data, and, they use comps from last year and this is a different market. Well, we may use past data, but we use current market trends to balance that out with. So if I see that the market's increasing at, say 0.3%, per month over the last, 6 to 12 months, and I'm using a comp from 8 months ago, well, then I'm going to apply that percentage increase to that comp to make it equal to what it should be worth in that market today based upon those trends. So we're trying to keep up as fast as we can. We're analyzing the market and we're trying to keep up with those trends and those increases on those past sales. But like you said, once some of these other homes that go under contract, once they close and people are paying out the wazoo, are just throwing down money, 50 grand over what it was listed for, then, those sales, they get in there, they're going to become new comparables. But like you said, the way this market is, just like every day, it's one thing after another, and it's just constantly changing. So it will take time to catch up. But again, anybody can we can pay whatever they want for an asset. It may be worth it. It may be worth $100,000 more to you because you have these motivations, these emotions, and these reasonings for paying that much, where 20 other people may just stop their bidding process and say, well, that's not worth it to me to pay that much. So you can pay whatever you want for the asset. It's just that when it comes down to it, for a bank lending the money, we're trying to do our best to give them the most accurate current data that we can. And, hey, that's just what it is. If you're listing a house, you're using the same data to list the house that we are, and then you're getting all these multiple offers over top of it. It's crazy, but we're trying to do our best.
Yeah, you're exactly right. Using the comparative market analysis approach alone, not enough. You have to make some adjustments for the current market, as you said. So that's good. Well, thanks for joining the show, Scap. I really appreciate it. Thanks for the additional info from the appraiser's perspective. So